So there's a little dark secret brewing in the back of this market rally as tariff exemptions kind of bolster the sentiment in the market a little bit. However, we're still in extreme fear, which is a little uncanny considering the market really didn't have much of a rally. Now, if you were thinking the thing that's going to blow up the market is going to be Netflix earnings, right? Because everyone is saying 30 to 16, not looking so rosy right there. A lot of revision to the downside. Or that Trump's going to basically say, well, no, the exemption is going to go away once China retaliates on anything. Or that the Fed's going to break something. Well, even with the reverse repo sitting at $102 billion, it's actually not that. It's actually not any of that. If you also said Bitcoin in hindsight, you may be a little bit right there, but you're not really getting warmer. The other now you must be saying it must be VIX, right? It must be VIX. VIX actually touched sub 30, where for the first time in a little bit, we've actually got sub 30 and maybe closing sub 30 today, but it's not VIX. It's actually the most safest investment in the world. That is probably the one that's going to be the black swan event of our era. And for all those that don't know what a black swan event is, something that a lot of people don't see coming, but it has profound consequences for the rest of the market. And, well, you may be saying, well, the market rallied yesterday, and the market may have rallied today. However, I don't trust hollow candles. Simply put, we didn't get to weekly higher high. I simply don't trust this rally yet. Now, we're going to dive into why I may be trusting this rally in the future, but we're also going to be talking about the thing, the black swan killer that is out there. And the simple thing is we got a preview of that black swan killer back in August of 2024. If you all don't remember what happened in August of 2024, the dollar yen carry trade, or also known as the basis trade, was completely unwinding. Now, this trade was where investors were longing the dollar and shorting the yen because they expected the Japanese market to continue with these negative rates. Then the Bank of Japan decided, no, we're actually going to raise rates, which subsequently caused the trade to basically unravel. When these style of trades, and we're going to dive into a little bit of how they're created, why they're so dangerous, and how this one is a billion times worse. When you have carry trade unwinding or basis trades unwinding, it essentially is what you can sell. Most of the time, it's not the two assets that you're actually shorting and longing. It's usually stocks, Bitcoin, gold, and silver, which would explain on this latest drop that we had, where gold and silver both were dropping significantly, right? You would have thought while the market was dropping that gold and silver would have had a massive rally. Well, to the contrary, they didn't. And subsequently, gold as well, right? Even good old oil having a massive shortfall. Now, even though it was recessionary fears driven, it still was heading lower. Everything was selling off, including this one very, very crucial thing, which was the yields. Yields were rising while bond values were falling. Traditionally, when you have a market panic of any sort, you go and run to the bond sector. Why do you run to the bond sector? Because the government has a monopoly on violence. If the choice is between nuking a country and paying you back, guess what? We're nuking a country to pay you back. That's how the government works. They have a monopoly on violence. They are the guarantor of your money because they can go and essentially legalize their abuse and also commit war atrocities in the name of democracy. But enough about that. Why is the dollar yen the thing that crippled us last time, and why is the Treasury market going to be the thing that unravels us this time possible? Now, I say the word possibly because if we don't get continuation of these tariff threats, if we don't get continuation of the market falling, if we don't get the leg down, this most likely won't be the thing that unravels the market. It will stick around, but it can be unwound. And I'll also explain how that can occur and why it's not as easy as everyone thinks. So going back to what was going on with the market, right? The yields were going up because there was a mass seller. Now, a lot of people have been talking about how China is dumping bonds. We ourselves on this channel have covered that as China is dumping bonds, that everyone is basically going and selling bonds. There's not a lot, they're drying up liquidity, they're pushing the yield higher. And why is that necessarily a triple threat? Number one is because the yuan, as it continues to sell off, China's going to have to then dump more treasury. So tariffs trigger this event. China gets tariffed, United States imposes tariff on China, China sells treasuries. Okay, so now we have the recipe of a domino effect going, right? So as more and more escalation in the trade war occurs, then we get more and more tariffing on China, we get more and more treasury sold off. Now remember, this is the crucial thing, and we're going to be talking about that specifically. What will happen then? Yields will continue to go up higher in a very volatile manner. If we go to a simple, right, let's do a line chart where you guys can see that we basically, the blue line, this volatility, this sharp move up in a very short period of time is not what you expect from the most stable asset in the market. You kind of expect it from Bitcoin. You expect it from Nvidia. You expect it from Meta. You expect it from all the big tech companies, right? Come on, even Lumen, for Christ's sake, or Tesla, right? AMD, AVGO, SMCI. The list goes on and on and on. You expect that volatility from those type of companies. You don't expect it from the treasury market. So going back to the candles, right? We can clearly see that we're in a little bit of volatility. Now, what does that all matter, right? Why does TLT matter? Why does bond value matter, right? So TLT basically got absolutely cratered back down to 86, which is also, if we go back to what was occurring in October, right? August of last year with the bond market, the bond value was going up. But this is a little bit interesting because the bond value is going a little bit down, right? Because we're talking about a different asset, right? Dollar yen was currency. Now we're talking about the treasury market, which is way bigger. Now, this is where we get into the funness of the video. This is what we call the basis trade that is going to wreck everybody. Notice how even when we go to a simple line chart, we can see that on a weekly level, we really don't move violently except for a couple of points, right? Coincidentally, June timeframe of 2024, and we also got the around the August drop, right? So, currency markets, right? Treasuries are extremely safe. So when I'm a big bank, because I like making a lot of money, I'm gonna go and basically go to the Federal Reserve and say, hey, I'll give you $1. I want to borrow $1 million for that $1. And the Federal Reserve doesn't absolutely say no, because if you did this, they would say go get lost, right? They say, what are you going to do with it, bank? And I'm like, because I'm a greedy, snobby bank, I'm like, I'm going to buy treasuries and short the treasury futures. Jay Powell looks at me a little bit and he's like, yeah, here's $1 million for every dollar you give us, because these assets basically don't move. They don't move at all, right? They don't move in any way, shape, or form. They coincide between the two. But I can lever this up all I want, right? I'm a big bank. I put billions of dollars into it. And then subsequently, the trade goes from me having $1 billion to several trillion dollars. But that's fine because this asset doesn't move, right? So this asset, I'm basically bidding the bid and the ask, right? So someone's willing to give me $1, but it's selling for $99.99, right? So I'm basically making the difference between these two, and it's very small, right? I don't have a lot of risk because this thing doesn't move, right? They coincide. They're the same asset. It's basically the current face value of the bond and the future price of the bond. So it's only the speculation spread between. But I'm able to lever the daylights out of it. So essentially I have this massive trade that I have absolutely no funding whatsoever for. I only have to hold a small amount of collateral because the trade's fine, right? There's no risk until you get a shock to the system. Once you get that shock to the system, the whole trade basically goes bottoms up as the current face value drops on the bond while the future projection of that bond goes up. And there, where a couple cent move, right? A couple cent move of approximately 1,000% screws me like no tomorrow. And this is the basis of a basis trade and a carry trade, and how it can become a financial disaster. Because the Federal Reserve is basically giving me a margin call at that point. And the Federal Reserve is basically saying, hey, you owe us $6 trillion by tomorrow. And in no uncertain terms, do I have that money to post the collateral? Do I have anything I can get my hands on? Oh, mind you, I can't sell treasuries because the treasury market going to hell. I can't sell bonds because that's going to hell. I can't sell corporate debt because that's also going to hell. So what do I got left? Good old stocks, good old precious metals. And it's, think of like every single bank doing this at the same time, tripping over one another to basically get out of this trade. Oh, and the trade is getting worse and worse. And by me selling the stock market, I'm triggering the next bank to basically do the same, and the next bank, 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 and here we go. And here's what is the making of a fire sale. Now, for all those that stay to the end, how do we know this is going to happen? Well, there's simple indicators, right? We can look at the bond market. We can look at the overnight lending facilities to kind of get an indication of that. But really, it's a simple answer. Do you blow the low in the stock market? If you blow the low in the stock market, you trigger the domino effect. So right now, do we want to be trading anywhere below 505 on the S&P? Do we want to be trading anywhere remotely close to 180 on the Russell? No. Or do we simply want to be trading anywhere near that 430 number, which is the re-entry of the bear market for the NASDAQ and S&P? Now, one of the things I'm going to be looking for is this inverse head and shoulders kind of forming right here. That is where I'll start to maybe give some more faith to the rally after having the deck cross yesterday. And we also got Jerome Powell basically speaking this week on tomorrow, right after Atlanta Fed GDP comes out. Are we going to get another negative further print on this? Throw in the comment section what you guys think. Remember, it's a shortened week this week for the stock markets, so Netflix earnings, all the options, plays for that are going to expire on Monday. They're not going to expire on Friday, so make sure you guys understand that when placing trades. Just a quick public disclaimer for that. But I want to see the markets actually push higher, and that's where we're going to be looking for this continuation. I want us to push higher. I want us to get above the 200, birth the new bull, and then subsequently gets a little more interesting. Until then, you have this overarching thing sitting above you with the carry trade, and yeah, this may have been the bottom. I've also posted the meme where basically, as you guys can see here, yeah, the Fed always has the last laugh. So if you guys don't want to be the one holding the bag at the end, or really understanding the psychology that you have to invest your money in, make sure you guys check out our weekend deep dive over here along with the latest video about Jamie Dimon. Thank you all so much for watching, and I hope this was a little informational about how the carry trade works, what it is, how a black swan event could be coming your way, how to necessarily prepare for it or know if it's even coming, and also an in-depth dive of what to do if the market basically falls further in the weekend deep dive over here. Thank you all so much for watching, and I hope to see you in the next